Hello and welcome everybody. I'm Andrew McCord and you're on Stockbusters at TaipanFinancialNews.com. Well, the news is impossible to ignore. Everyone is now well aware of the disastrously large drops in the market last week. And many of you are probably asking yourselves, what's going on here and how can I make any money in conditions like these? These are both good questions, and here on Stockbusters, we believe you deserve good answers. So joining us today is Neil DeFalco, Senior Equity Analyst and Editor of Gresser, who's managed to rack up several successes within extremely volatile markets to talk about where we're headed and how to hedge any long equities positions that investors may be holding on to right now. Neil, thanks for joining us.
It's a pleasure to be here, Andrew.
All right, so point blank, what the heck is going on with the market right now?
Well, Andrew, if you look at the Dow over the last few years, you can see that it flirted with 11,000 for almost 2 years during 2004 and 2005, before breaking through the barrier and starting an amazing 3,000-point gallop. The index had no problem smashing through 12,000 or 13,000, but then it reached 14,000. I think investors started to wonder if this new frontier is actually warranted. The housing market is in complete shambles. A gallon of gas has quadrupled over the last 7 years. Food prices have tripled since 2004. And we might as well put energy in a rocket ship and send it to Jupiter. People are dealing with serious issues out there, and the market is not immune to those same issues.
Okay, well, inflation just dropped below 2% for the first time in 3 years. The government seems to think things are stable. How do you explain that then?
Well, yes, the government claims that core inflation is 2%. However, unless you live in a tent in the woods and eat squirrels and berries, I think you can agree that the basic cost of living has gone up significantly over the last few years. I remember the first time I went food shopping when I moved to Baltimore. I bought a bunch of vegetables, 3 loaves of whole wheat bread, 2 jars of chunky peanut butter, a half pint of boysenberry jam, a pound of frozen shrimp, and 3 boxes of grits. And all that cost me $40 in 2004. Then about a week ago, I went to the store, bought the exact same basket of groceries, and it cost me $90. The price appreciation is absolutely mind-boggling.
Well, I can definitely see where you're coming from with that.
Yep.
I remember just a couple months ago, Baltimore's local energy company decided to raise rates an additional 50% right before the start of summer.
Yeah, well, you're right on the money with that one, Andrew. Energy prices have gone up 300% since 2003. Basically, things aren't as fine and dandy as everyone thinks. And you can be sure of one thing, the Bush administration is not going to tell you how it really is. With things as bad as they are, it would be complete political suicide. Look at Jimmy Carter in the late 1970s. His administration stated that inflation was at record highs of over 12%, and it was a complete debacle. And nowadays we have political puppets like Hank Paulson who come out every month or two assuring the public that the housing recession is bottoming out. You know, Hank has said this for the 8th straight time, and he looks foolish because he's continually contradicted by negative housing statistics.
All right, well, Neil, how can our viewers profit from this kind of environment? Is the market going to go up? Is it going to go down? Is there any way to tell?
Well, this, of course, is the money question, Andrew, and everyone has a different opinion on the subject. Some are right and some are wrong. And I'll be honest with you, I have absolutely no idea which way the market's going to go. You know, if I could predict future market movement, and I can tell you one thing for certain, I sure as Sam wouldn't be doing this interview. I'd be on some island in the Caribbean enjoying an ice-cold Singapore sling. Now, I'm not saying that I can't make profitable recommendations in this current situation. We just have to play the field, explore all possible options. And over the years, I've made some serious money in volatile and extremely volatile markets. And based off of that, I think it's time to revisit the straddle strategy.
All right, I remember you mentioning straddles the last time you were on Stockbusters. I think it was on Ryland. You made something like 25% on that play, didn't you?
I did indeed, Andrew. The option straddle works wonders in a volatile market. You can apply this strategy to the Dow Jones Industrial Average by purchasing call and put options on the Dow Jones Exchange Traded Fund, the Diamonds. The logic behind this is very simple. Over the last 6 months, the Dow traded between 12,000 and 14,000 points. This is a very large range, and with the sudden short-term price oscillations, we could be in for a very bumpy run. And that's how you make your money. We aren't concerned with which way the market moves, as long as it does, in fact, move. Now, since I'm about long 5 equity positions in the Gresser portfolio, I would do an offside straddle, where I would use a 2 to 3 call to put ratio when buying the option contracts. If the Dow goes up a significant amount, then we make money on the call in our existing long stock plays. If the market continues to fall, then we can minimize our losses with the appreciation of the put options. The trick is you have to tailor the straddle with regard to your specific portfolio.
All right, Neil, good stuff, but unfortunately we're out of time. Thanks again for the insights. We'll have to have you back soon to talk about it all again.
Anytime, Andrew.
You can learn more about Neil's straddle strategy and how to pull gems out of volatile markets like the one we're seeing right now through his Gresser Research Service, which can be accessed right here on the TFN homepage. Thanks again for joining us on Stockbusters. I'm Andrew McCord, and until next time, keep your portfolio safe.